Hello everyone, my name is Ling and I'm from Team Shinosuke. You are watching our company strategy in performance analysis and simulations. Now, let me give you the outline of this interesting video. Firstly, overview of results after playing 2 rounds. More importantly, I will explain the strategy we applied and you probably want to know which lesson we have learned. Based on this data, we will show you how we planning for the next round. After 2 rounds running the business, we now gain more than $5 million of net profit, which is at the average of 3.6 return on sales. In general, you can see here, the balance scorecard after round is 65 out of 82, increasing up to 75 out of 89. It is quite a positive signal and it also explains our strategy is reasonable. Let's move on to the most significant part. It is the strategy we did apply. We focused on niche cost leadership in 2 segments, traditional and low-end. The rest segments, which include high-end, performance and size, are differentiation targets. After round 1, we did release 2 new products named A-Link and A-High. We were designed to serve traditional and size segments. For more details, we go to each department. In terms of R&D, we focused on traditional and low-end products at the first round because we haven't had enough money to invest dramatically in other segments like high-end, performance and size. We based on the criteria of customer to redesign the product in terms of performance, size and MTBF. In this case, we just point out key factors that we have experienced and have positive results. To more details in traditional segment, it can be seen clearly that customer wants product at the age of 2 years, so the performance of products should be close to the ideal spot as much as possible. Similarly with other segments, high-end performance and size, if the product performs better and the size is smaller, it will differentiate in the market and attract customers in these 3 segments. Moreover, the MTBF should be closer and should be highest to totally attract customers. Revision in this segment is also important. You have to revise product gradually so that it's not only satisfy customer demand but also released at the same financial year. For low-end segment, the age of this segment is just need to maintain it up to 7 years, so it should not be revised in order to remain the age. But the MTBF is not important as it, so we don't need to adjust it. For marketing department, in terms of pricing, high-end performance and size, it costs a lot to manufacture and design the high-quality products in these segments. Furthermore, customers seem to ignore the price, and therefore the price should be highest in the price range. For traditional segment, the price should be lower than the maximum price, $1 or $2 is reasonable. For low-end segment, we should not price our products too low because it may not be competitive with other similar products. In terms of promotion and sales budget, we focus on traditional and low-end, then the promotion and sales budget should be invested more. We hopefully expect that our traditional segment will occupy up to 20% of the market. Other segments just remain the same or higher than 1 or 2% is reasonable. Next to the production department, we produce more than focus units, extra 2 or 3 months so that we will not suffer stockout cost. To utilize the capacity of the plant, we maximize the capacity of the first shift. Investment in automation is focused on traditional and low-end segments, again to adequately produce the demand. Human resource plays also a vital role. At round 1, we do not invest in HR. That's why the efficiency of employee is zero. But in round 2, It should be focused and maximized by recruiting new employees and training products of 80 hours totally. This costs us $5,000. In financial terms, we borrow the maximum amount to invest at round 1, and after that, it is expected to pay $7,000 of long-term debt in round 2. Now, I would like to tell you about the operational results which reflect our strategy and lesson learned as well. Our return on sales, which is how much profit generated in each dollar, is increasing from 0 to 3% at round 2, and we still dominate in the market with nearly 90% of market share. Asset turnover shows how the company exploits assets efficiently. This figure is decreasing from 1 to 0.85. It means our company was too hesitant to produce more and gain more profit compared with the excessive capacity. The leverage ratio is stable and 2.1 means our company is able to pay off the current debt. For the return on equity, which is how much profit generated in each dollar of equity, 10 to 50% demonstrates a strong company, but our return on sales has only 6.5%. It may result from the hesitation of using maximum capacity to gain more profit. Additionally, free cash flow is quite high. After in round 2, the net cash flow statement is $26,000. It allows us to invest more effectively and efficiently. That could lead to an increase in stockout costs, as the actual sales are lower than the potential market demand. It better produce less than demand to avoid carrying costs and emergency loan. However, we are considering to produce more in the next rounds. At round 1, we might reduce performance of high-end performance size segment, which led to very low level of profit. When we realized this problem in round 2, it positively increased the sales. That's very great. For the blending sessions, the result seems positive, so that we will continue to invest in traditional and low-end products and start a further investment in high-end performance and size segment. We will put effort to increase the performance and reduce the size to be the leader of those 3 segments. We probably invent one more product in round 3, which are in size segment. This is the end of our presentation. Thanks for listening and have a good day.